OPM, features, strengths, weaknesses. Today we're diving deep into OPM, or other people's money, a powerful concept in finance and entrepreneurship. At its core, OPM leverages external capital sources to fuel investments or ventures, minimizing personal financial risk. Key features include debt financing like loans and credit lines, equity financing through investors who gain ownership, and creative structures such as revenue-based financing where repayments are tied to income. OPM is primarily aimed at entrepreneurs lacking sufficient personal capital for startup costs, real estate investors seeking to amplify returns, and established businesses pursuing expansion without diluting existing ownership excessively. Strengths of OPM include accelerated growth potential, diversification of financial risk away from the individual, and access to expertise and networks provided by investors. Using leverage correctly, it can significantly increase the potential for return on investment, allowing you to pursue opportunities that would otherwise be unattainable. For instance, a real estate investor might use a mortgage, OPM, to purchase a property, leveraging a small down payment into a significant asset. However, OPM isn't without its weaknesses. The major downside is increased financial risk through debt obligations. Failure to generate sufficient returns can lead to financial distress or even bankruptcy. Equity financing means relinquishing control and sharing profits with investors, which may conflict with your vision. Furthermore, securing OPM requires meticulous planning, a compelling business case, and strong creditworthiness, presenting a barrier to entry for some. Consider the interest payments on a loan, or the potential loss of autonomy when partnering with venture capitalists. Effective risk assessment and robust financial projections are crucial. OPM is not a free pass. Ultimately, OPM can be an incredibly powerful tool when used strategically. It accelerates growth, diversifies risk, and unlocks opportunities that would otherwise be impossible. However, thorough due diligence, understanding the terms and conditions, and a clear exit strategy are paramount. The ideal scenario is where OPM acts as a catalyst, amplifying your own efforts and resources, rather than serving as a crutch. Assess your risk tolerance, evaluate your business model rigorously, and only pursue OPM when you are confident in your ability to generate returns that justify the cost. Don't treat it as a magic bullet, but as a strategic tool to be wielded with care and precision.